So today is interesting because the VIX is definitely going down, and that's not good for day trading. Typically, when the VIX drops below that middle band is when you'll see smart money or professionals uh, switching from day trading to portfolio managing. So there's not that many day traders actually trading at the moment. And you can see it's basically a pretty good trend there where the market's just going up. Coming up to the election, to the United States election, so if Trump wins, I guess that's probably good for markets, which it was last time. Well, at the moment it's definitely good for markets. It's good for the economy. There's arguments out there that it's inflationary. I think Joe Hockey was making that argument, but like we didn't have inflation last time Trump was in office, so it's a bit of a availability bias there, I think. And with all the tariffs on prices, sure they'll go up, but I'm not really buying that argument at the moment. They'll bring some prices will go up like cars, but oil will obviously come down. So it's not a very good argument in my opinion. So there's not very many people day trading. Is what I wanted to say. It's not a real good time to get a day trade. You need to be very, very skilled to day trade. So you'd be looking to go longs, basically longs only. 3 days a week, Tuesday, Wednesday, or Thursday is the most volatile. Monday and Friday probably do nothing. But Friday might do okay, who knows? But definitely want to stick to 3 days a week. Okay, so we could look. Basically, what I'm saying is we could actually take a break and not trade because the risk has increased. I mean, you could decrease the risk by trading longer term and putting a wider stop loss on, but that's not the goal of day trading. That's we want to be sort of in and out of the market within minutes, hours, not days or weeks. So yeah, I mean it's a different skill set. It's a different sure can be done, but I'm not doing that. So yeah, you could either revert back to paper trading or just. So I'll have a look. I'll go through the checklist, but there's no guarantees. Major buyers and sellers is almost irrelevant at this point. I mean, you could argue there's major sellers up here on the weekly. And if these buyers are wrong and the sellers are right, the price will absolutely retreat. But I see no, like, you know, like I look at the news and stuff. You need some catalyst for that to happen. And there's also argument to be had that that without tech, what's going to hold the market up? It's probably a rotation into small caps during times of certainty rather than uncertainty. So, you know, if we bring up the Russell, maybe Russell 2000. And that is not. So what I've noticed with the Russell is that it really goes into really forms patterns really well, like these wedge patterns. Excellent. But what we're seeing here is that it retested, it broke out of that channel, that wedge, and then it's just retesting. So maybe it's a false breakout, perhaps. You know, like we just, I don't know. It's, if it was hugging one of these sides, so if it's hugging, say, the top leading edge or the bottom support or resistance, for example, that will give you something sort of indication of which way the market's going. At the moment, it didn't hug the top; it just broke straight through and reversed. So, I mean, that doesn't really give me any confidence either. So basically what I'm saying is it's not an easy market to trade at the moment, especially day trading. Perhaps invert the chart can sometimes help us spot some patterns. What I'm seeing there is a break and retest. The trouble is when you invert the chart, that arrow there is going up. When you invert it, it's still going up, which is the wrong direction. So we'll break and retest here. It's not going to show it. It's going to be, yeah, it's not going to be right on this one. But you could almost guarantee some sort of sellers in that zone there. But that's not guaranteed, right? Because the VIX is low, so you don't want to bet against the market unless that VIX was breaking through one of those, like the upper bands on the Bollinger daily. Then I'd be looking for shorts, like a bounce there. But because it's not, you don't want to bet. Like, I wouldn't bet against the market, so I'd be looking for. So basically what I'm trying to say is that without a pattern like a double top or break and retest below
formed structure, and you don't want to bet against the trend. There's, in terms of technical analysis, there's no opportunity there. Yeah, basically, I'm talking about technical analysis. I'm not talking about a catalyst, or I'm not talking about uh, data or power speech or anything like that.
4.5.
Yeah.
It's a fair way. Don't know if we get that, but we do have Mr. Powell speaking, I think, so you never know. Looking for about 15% on these green zones. Now, the green zones are the tradable zones. I try not to trade too far away from the key levels because it increases the risk, basically, because you can't put us. Wow, look at the stop loss. Yeah, I don't know about that. Be betting for it to fall back 1.5, and then where's the? Oh, that's daily, yeah. So I mean, it could absolutely fall back to zero when. It's definitely interesting. With probabilities, I'm looking for some sort of clarity. So if market does this, what are the odds that what are the what looks obvious, basically. Sometimes it does look obvious, and other times it just doesn't. I don't see that moving any more than that. So that would be 3.2% a day. Like, to go much higher than that, you're looking at 4% a day. You'd need some pretty extraordinary news, or would it say news or catalyst or something? Yes, it's possible, but would I want to buy there? No. Wow. See there, it's coming up to about 7 candles. That is 7 candles actually. I'm not saying it can't go higher. certainly impressive. It's interesting to me. So if you have a look at the the market, the S&P 500, it's up 0.7, where the Nasdaq is up not quite double, but nearly double, right? So, like, Apple just released the new iPhone. I get that. So maybe there's some bit of maybe a bit of rotation back into tech, maybe. So Bitcoin's doing. Bitcoin is up, down, up. It's just not doing much. Yeah, like with the probabilities, like there's just not a lot of patterns, is there? Meaning the market's likely to just keep trending, really, without any obvious. I'd like to see what market does there, because it's really strong, and that's about 0.5 up from where we are. So the market looks strong. Maybe I'll take a trade there. Well, it does look strong, to be honest. There's a lot of sellers on ES and some more on the market. So yeah, we could actually see if we pull up the market. Well, ES more specifically. I wonder. I'll have a look at gold quickly. Now we're still on the inverted charts here, so up is up and down is down. What's up is up. So we switch to a low time frame. We said double top there on gold. Triple on the silver. So it's forming a cup and handle, to be honest. So I mean, if the metals fall back, that will probably trigger algorithms to sell the market. And that's my personal opinion. It's not absolute. But if you look at that, I mean, that looks apart from the rise in the centre there. Looks like it could form a cup and handle. Wow. That's all overnight as well. It's just crazy that the market did that overnight. Barely did anything yesterday, like really struggled. The Asian markets and Australian market did quite well, so I mean, it's probably a bit more of a catalyst for it. We do have some data early on in the trading day, so I think it might be before market open, an hour before market opens, and just before market opens. So 12. Should be about 9:15 US time. It's not major, but it is something. Now that is definitely not a major level. But given the strength of the market, I mean, we'll have to see what the footprint charts do. Fed power speech at 9:20. So that'll be interesting. So we didn't really want to trade within the first hour or two. I'd kind of want to let markets settle. The volatility is really kind of unpredictable, and we want to seek certainty rather than uncertainty. I've got a robot about some of these because speed of entry very slow. Would that match our game plan? So if we ask for a slow entry, the market takes an hour or two to come back to one of these levels. That would be good for us. The problem with these upper levels is that they're really old. Like it's A level, but it's like it's not that they're irrelevant. It's just they're less significant because that was say in June. Many months have passed, and everything's changed. Well, not everything, but you know, you get the point. These are break and retests for less risky. Trends require aggressive entries. Well, they do. But I'm not expecting it to trend. So there's that. So we'll be conservative. We're not stress title stacking losers, but we will check the inverse charts mainly because anything that's perceived as unpredictable is a dopamine trigger, like absolutely anything, and that's subjective. So if I'm looking at this chart and I'm not seeing any obvious trades, it's just perceived as unpredictable or uncertainty rather. So like novelty is just it's a trigger to trade. That the dopamine basically triggers. So if people are not familiar, habits. I don't want to say the elements, but the basic elements make up a habit is trigger behavior rewards, and triggers can be a location, a time, or an emotional state. So a lot of like psychological concepts overlap as well. So it's not like definitive this or that will cause you to make mistakes, but it can be a combination of things. But basically, I just perceived by me as unpredictable or uncertain. So I might not even trade. It's not looking great, but saying that, if the market does what I think it will, well, there might be opportunity there. So you never know, but at the moment, it's not looking good. Yeah, we're not going to settle on. So when the market, if we do decide to trade, and the market follows our probabilities that were set out, for example, if the market retraces back down, we'll be looking for a break, like a break and retest. I'm just not exactly sure about these levels. That one would be ideal, but that's a fair way to go. Like you're looking at 1.4%. Like in the market's up 1.2, so that will be less than what the market must have closed probably around there, right? So let's look at this. Yeah, the market closed just there. So partly we'll have to, if we did trade, we'd have to look at the footprint charts and the book maps and just see where the price actually, like what price is doing, where the buyers, where the sellers. It's not ideal, is basically what I'm saying. You see passive sellers, well, they could be. I'm still unsure whether these on the book, I think they're called book map, right? Yeah, book map. So whether these orders sitting above price are buy orders or sell orders. Because sometimes you see price jump up and then you'll see a huge bubble where it hits those orders. And I think they're actually buy orders. So traders are looking for break of the highs. Here, I'm not entirely sure that they're looking to go long. I think they would be sell orders. In a trend, like why would you be looking to buy if it passes a certain level? Like because there's no historical data at that level. Like price has never traded there on the market. It has on the Nasdaq, but not the market. Like if you look at the Nas here, it's traded, but the market just hasn't. Like it's never traded that high. Ever. So I interpret those orders as sell orders. So there might be opportunity there, but it's not something we should stress over. Come back here. I've got So if it's perceived as unpredictable, it's a dopamine trigger, and we risk trading for the sake of trading. So that's anything that's unpredictable, and there's a lot of unpredictability in the market. So the routine, they're just kind of trying to explain what I've written here. So the routine is basically our healthy habit that we do every day, and it creates this healthy habit. So we turn up at the same time, roughly same location, and the more we do it, the more it creates like a habit, like exercising. It's routine, right? And to get good at it, you need to repeat it. And like if you just rocked up to trading without after ceasing trading for 6 months or something, it would be unpredictable. Like you would have no history of what your trades, what your performance or skills are like. So you would put, that's not what you want either, because that's again unpredictable. So you want predictability through your routine, so you're not trading for that dopamine hit, that rush, that reward. At the same time, you don't want to trade when the market's perceived as unpredictable. So it's a double-edged sword that day traders sort of try and balance. But like I've said here, it separates the winners. So basically, I'm going to leave it here. Hopefully the market probabilities play out, but I'm just not convinced. Better to do something else, and we'll see what happens.